I received a bunch of emails with regard to me not posting every week. I'm trying to focus more on the member commentary a lot. I have two versions, the YouTube version and the members version. The members version I can spend a little bit more time on, give the members a little bit more value for the subscription. So I'm probably going to post every other week, maybe every 2 weeks on YouTube. But for members, of course, I'm still going to be publishing the members version each week and getting that out to you. As a matter of fact, for the members, I do commentary in the evening as well. Usually every other evening. Last week, I think I did it every night because of the conditions in the market. But it was well worth it. I think it was a good value for the customers. Okay, what I wanted to start off this week was with a really response. I received several emails with regard to great examples of the thievery that had taken place on Wall Street. I always say that they're thugs, and yeah, I stand by what I say. They are thugs, and I believe that you have the media, which is complicit, along with the market makers. This is my own opinion. I don't have any evidence. I don't have attorneys working on it. It's the SEC's job, and the SEC does nothing about it. Case in point, here's my example. You had on May 13th, you're looking at this is published on yahoo.com via the Associated Press. Goldman analyst calls U.S. Steel conviction buy. Now, I always love these upgrades, and you always have to ask yourself, I don't have an account with Goldman Sachs, so why are they being so nice to me and giving me this obviously such valuable information? I mean, it's a conviction buy in their opinion. So this was on May the 13th. Let's take a look at a chart of U.S. Steel. The previous day, it had a reversal, recaptured 54, which is support level. The following morning, Goldman comes out, raises their price target on U.S. Steel, says there's a rebound in steel. Stock rallies higher to 58, reverses to close low, almost, I believe it was lower on the day or neutral on the day. It was a bearish reversal. So the professional traders waited till late in the day and they dumped their shares. And if I had a nickel to bet you, I would bet that nickel and say that Goldman Sachs is one of the lead sellers that day so they can get out of their positions. They manipulated the market with the assistance of CNBC announcing their upgrade, and then you had the market makers spiking the bid, squeezing the shorts, and then you had the dumb money come rushing in because they thought, wow, U.S. Steel says it's going to 75, 76, whatever their strike price was. Sure enough, the little guy gets left holding the bag, and this is a signal for new shorts to come in and get short. I mean, it's bearish reversal. It's a short indicator all day long, and sure enough, you had the sell-off. I closed at 57. Had a high that day at 57.96. Where's it trading now? Over $10 lower. Thanks, Goldman Sachs. I mean, CNBC, you provided such a great value to the customer. I mean, it's a joke. Do you actually think that CNBC listened to their own recommendation here and went out and bought the stock? The traders would be shocked. I mean, last quarter they said they didn't lose one penny. They made money each day on their trading operations. You think they did that by listening to upgrades on CNBC? No, they didn't. They were looking for opportunities back here. Bearish reversals, bullish reversals back in November. They knew back here when nobody wanted U.S. Steel that it was time to get long. They didn't wait for an announcement to come on CNBC to get long. And of course, they were selling up here, which is their job. They know what they're doing. So if you want to learn how to trade like this, join the Contrarian Trader. Take advantage of the 14-day free trial offer. Don't let these thugs on Wall Street and CNBC take parking space up in your head and say to get long here. That's a joke. It's an absolute joke. When I hear things like this, it's an announcement to me to get short. That tells me to get short. It's a fairly safe bet. So that's my example. If you have any questions with regard to this, please shoot me an email. I'm more than happy to get back to you. Let's take a look at AK Steel. If you want an example of how to trade steel, this is one of them. I have been short this market for quite some time now, and we have nice profits in our short positions. But that doesn't mean that we don't want to get long every once in a while. And AK Steel, when back here when nobody wanted it, and we saw an opportunity to get in here to buy it on the cheap. You had this big uh, bottoming tail here, and we knew it was time to get in for a trade and then get out. And sure enough, that's what we did. We jumped in, we rode it for a couple of points, got out. And sure enough, what happened? It broke down again. So this is the way you trade the market. Your core positions right now should be short. And we're using ETFs to keep us short the market. The only one we're net short on, literally short of the ETF. We're using the RTH. We're using sector funds to get us short of the IWL or the Russell 2000 and the SDS, which is the S&P 500, and the financials. We're short the financials. We have great profits in them. We're doing well. But that doesn't mean that we don't like to get long and take advantage of oversold conditions. And when I say oversold, it means that if I see a pullback, if I buy today and I see a pullback tomorrow on the stock, I'm not going to have buyer's remorse. I'm going to view it as an opportunity to buy more because it's so deeply oversold. You know that snapback rally is going to give you an opportunity to take profits off the table and get out, either add to cash or add to your short positions because you know the rally's not going to last in the market or in the stock, and you have an opportunity to add more to your short positions or just raise your cash, build your cash so that when extreme oversold opportunities appear on the horizon, that's your opportunity to get long those positions so you have a leg in the water each way, short and long, short and long. You don't want to be necessarily net one direction. Okay, that's not how to trade this market. In a downtrend, because we believe we are in a secular downtrend in this market, that you should have your core positions net short. You should have your long positions. You should have a cash fund for your long positions. Trade around your short positions and take profits and get out. Put that money in your pocket and look to get either shorter or build that cash position. Sorry to repeat myself, but I just want to make sure I get my point across. If you have any questions, please shoot me an email. Dow Jones Industrial. More than likely going into the week, we're going to see a rally in the Dow Jones Industrial Average. That's only because we're very oversold. They're going to try to recapture this 200-day moving average. We had almost a full retest of that Fat Finger Day, which was BS. That was selling. The NYSE just halted trading on several stocks, and that caused liquidity to dry up. But people wanted to sell. They wanted to get out. And when you see institutions issue market orders, I mean, they were worried that day. So we're probably going to see a rally and attempt to recapture this 200-day moving average. We do have long positions. We also have a long position list that we're looking to get long of. A couple of S&P 500 names as well. I'll discuss those in my members' commentary this evening. We'll look to get long of those trades this week, and then we're going to look to get out of those long trades, add to our cash position, or get short. You can see that selling has been on extremely high volume. You had the buyers come in on Friday to bid the market back up. The one thing I will draw your attention to, and I brought this to the attention of my subscribers last week, was that you had a decoupling of the trade in the U.S. dollar, the market. Let's get this as the market had gone down on Thursday, yet you also had a decline in the dollar on Thursday. So normally, whereas the dollar has been weaker, the market's been rallying, you had a decoupling on Thursday. That was because you had those building permits come out, and they were worse than expected. You had jobs data that came out worse than expected. And so the focus, you could see, is starting to turn away from Europe and back onto the United States. We have our own Greece-like problems. We're building towards it. And eventually we're going to have the bond vigilantes stop buying our treasuries, and the squeeze is going to get put on the U.S. markets. So don't think that we're immune right now from what's going on over in Europe by any stretch of the imagination. And if you want to refinance your house, now's the best time to possibly do it, because interest rates are eventually going to go higher. Here's a long-term chart of the U.S. dollar going back to 1986. And you can see we're heading up into those 2009 highs. And you can see a topping tail here so far that's formed on the U.S. dollar for the month of May. Well, we're to close out May here, you can expect that this dollar would roll over because of that huge topping tail and head lower. We break below 74.23, we're going down to 70.70. If we break below there, uncharted territory, folks. It's going to be bad. So by no means are we out of the woods as a nation. Here's how the dollar has fared against the S&P 500. There's an overlay here, and you can expect a rally in the S&P 500 as you had here, and you're going to see double tops get put in. And once those double tops get put in, you're going to see the dollar decline rapidly, and that's because the bond vigilantes are turning their attention on the United States. So don't be surprised to see that. If you have any questions, please shoot me an email. If you're trying to decide on how to trade this market, you don't need to be a member. I don't want to see you get hurt. If you want to see how we're going to trade this market, please subscribe to the 14-day free trial. It's free. If you don't like it, cancel it. And just sign on to your PayPal account and cancel it out. I'll be sending out member commentary this evening. And for everybody else, have a great trading week. Enjoy the remainder of the weekend. Have a great week, folks. Bye-bye.